Hey everybody, Smart Silver Stacker here. Hope you're doing well. So we are edging closer to economic catastrophe and mayhem by the day. That is why the price of gold just soared above $3,300 for the first time in history, because gold is behaving as a barometer for chaos. While gold is soaring, the US stock market is in the red today. Some bad news for tech, as the escalating trade war between the US and China is really beginning to impact the earnings of US companies. And we also just witnessed a fairly ominous sign in the S&P 500. It's known as a death cross. We'll take a look at the chart today. And speaking of charts, we need to take a look at the chart of silver as well, because the silver price is up significantly today as well. And it's shaping up to look as though silver is set for a big move higher. So let's get to it.
The worst day on Wall Street since the crash of 1987.
We're now down 43%.
This could be the most serious recession in decades.
Protect your retirement with gold and silver IRAs. Learn more at stbullion.com/IRA. Okay, so starting off today with a quick update regarding the US-China trade war. Here's a headline from Bloomberg earlier today. China open to talks if US shows respect and names a point person. So China is now stating that they are willing to come to the negotiation table, but they are laying out some criteria that are necessary before that can happen, including they want a more respectful tone set by the administration. I guess the Chinese were upset about some comments from J.D. Vance regarding quote-unquote Chinese peasants. Now, you would expect that this headline here would have a positive effect on the U.S. stock market, similar to the effect that we saw when Trump announced a 90-day pause on reciprocal retaliatory tariffs. But that is not what we are seeing today. In fact, the NASDAQ is down over 2%. It's been down all day. The S&P and the Dow are also in the red. So why is this? Why is a headline that should be buoying U.S. equities not having that effect? Well, a lot of it has to do with the reality of the trade war, which continues to escalate. And NVIDIA stock was leading the way down today in the tech stocks after NVIDIA revealed that it is going to see a $5.5 billion hit from controls on exports of its H2O AI chip to the Chinese market. In fact, NVIDIA was down as much as 7% earlier today. And it said in a regulatory filing that was filed last night that the US government is now requiring a special license for exports of its H2O AI chips to China. And notably, no licenses for these GPU shipments into China have ever been granted. And the effects of these trade wars will mean lower earnings for many of these US companies as trade between China and the US, China, the second largest economy in the world, is reduced. And this is therefore having a significant downward effect on the stock market. In fact, we just got a fairly ominous sign in the S&P 500. This sign right here, it's known as a death cross. And this is when the 50-day moving average, so a shorter term moving average of the S&P 500, crossed the 200-day moving average. So right here, back at the beginning of March, you saw the S&P 500 drop below the 200-day moving average, and now we've got this death cross. Now, the death cross is not necessarily a death sentence. In fact, sometimes it can precede a short-term rebound, a sharp rebound. However, it is also a sign that has preceded every major bear market of the previous century, including the 2008 financial crisis. And given the backdrop of an escalating trade war, which will, if not resolved, have a major impact on many of these U.S. companies, this is concerning. And the fact that investors are concerned here is really writ large on the chart of gold, which you can see right now trading at a record all-time high, over $3,300 for the first time in history. The price of gold right now is up $96 on the day. Now that's about 3%. As we start to see the price of gold move higher and higher, these large dollar moves are going to be a lower percentage. Just mathematically, that's how it works out. But seriously, up almost $100 on the day in the price of gold. Once again, we are seeing unprecedented highs in the price of gold. And right now, we're approaching the inflation-adjusted all-time high from back in 1980. If you adjust that high of $850 for inflation, granted, we're using the CPI, that gets you a price between $3,400 and $3,500. So we're a stone's throw away from an inflation-adjusted all-time high in gold, at least when you use the government's inflation data. However, if you understand that the CPI greatly understates the rate of inflation, the real inflation-adjusted high for gold is likely much higher, and therefore I believe that we still have a long way to go. We should maybe be a little cautious here. If you look at the RSI on gold, the Relative Strength Index, which is a measure of how overbought or oversold an asset has become, it is now at 73.93, and anything over 70 you have to be a little cautious with, and that indicates that maybe we'll see a pullback or some trading sideways as the gold market consolidates. However, given the amount of geopolitical uncertainty right now surrounding this trade war and also escalations with Iran and the possibility of a major conflict breaking out in the Middle East, it may be a while yet before we see the price of gold correct, and the RSI could certainly go much higher than it is currently in the event of a major escalation in the trade war or in the conflict with Iran, or even with the de-dollarization process, which we've been witnessing, in which foreign central banks are dumping US dollar-denominated assets such as US treasuries and the US dollar. And what do they buy when they dump those US assets? Well, they buy gold very likely, because that is the sanction-proof asset, the asset without counterparty risk that you can rely on in times of massive uncertainty. You can see the US dollar index remains below 100 here for the first time since 2023. We saw recently the DXY, the measure of the dollar against foreign fiat currencies, dropping below that level, and it's staying there. This chart also on the RSI looking a little oversold here. So maybe if we don't get any major developments, this might chop sideways for a little bit and consolidate before we see a further decline. But my forecast is that unless the trade war comes to a quick end and a quick resolution, we will continue to see the dollar lower. And this really fits nicely with the plan for the current U.S. administration to reshore U.S. manufacturing. If you want to boost your exports, having a weak currency is a good way to do that. Now, who does that benefit? Well, it benefits the corporations and the companies in the United States, but it doesn't really benefit us, because what we have to deal with is a debased currency and a rising cost of living. Now, moving on to silver, the silver chart is looking very promising here. Silver up about 2% right now. It's just under $33. We're still on the way to regaining all of the losses that followed that Liberation Day reciprocal tariff announcement, but it looks like silver has a way to go here before it tops. If you notice here, we've got a bullish cross on the MACD. That is the MACD line crossing the signal line, and we've got the histogram here turning positive. That is a very bullish technical indicator for silver moving forward. And on silver's RSI, we mentioned gold was getting a little overbought, but not so with silver. Silver's RSI right now at around 54, which suggests there's still a long way for silver to go higher before it needs to pause for a correction or a consolidation. And so this looks like a very good time to be stacking. Just my take, not financial advice, of course, but given how expensive gold has become, the gold to silver ratio now back over 100, silver is looking like the much better buy here, and its chart is looking very good. Now, if you are thinking of stacking some silver, you might want to check out this, the Smart Stacker's Guide to Avoiding Costly Silver Bullion Mistakes. It's a practical guide for stackers to avoid getting ripped off. I put this together. It's a free report, 100% free to you. I don't get anything out of this except the fact that I want stackers to not make mistakes. I don't want you to get ripped off. I don't want you to get counterfeit coins. I don't want you to pay too much for your bullion. If you want to get this free report, all you have to do is sign up for my free e-newsletter. There's a link down in the description of this video. And when you sign up in your welcome email, there will be a PDF copy of this free report. Probably take you about 5 minutes to read this thing, and it could save you hundreds or thousands of dollars if you are stacking. So I do highly recommend that everybody check this information out. In another sign that the trade war is continuing to escalate here, the White House has now announced that China is facing up to a 245% tariff on imports to the US as a result of its retaliatory actions. Now, does this really matter? Does it matter that 245% might be the new tariff rate versus 145%? Anything over a certain point essentially means a de facto halt to trade between the two countries. Now, yeah, this might hurt the Chinese economy. They sell a lot of stuff to the US. Of course, they could always consume that stuff themselves. And what do we trade to the Chinese for these goods? Well, we trade them fiat dollars. So you tell me, who's getting the better deal there? We give them paper money that we print, and they send us real goods. It seems to me like they're probably getting the short end of the stick there, and ultimately they can probably make do without the piles of US fiat currency. But how will the US economy fare without cheap Chinese manufactured goods? It will mean higher costs for a lot of the stuff you buy at Walmart, for a lot of the stuff you buy on Amazon. And ultimately, this may just be a lose-lose situation for both countries, but that won't be much consolation to Americans who are going to be facing a higher cost of living. And finally today, we do need to talk a bit about Iran, because there is really no sign here that this escalation in the Middle East is abating. The US continues to launch airstrikes against Yemen. Donald Trump has made it clear that he views the Houthi rebels in Yemen as an extension of Iran. And now we have got the head of the UN Atomic Agency saying they're not far from developing a nuclear weapon. And this is a line in the sand for both Donald Trump and Israel. And so the threat of a major escalation in the Middle East continues to persist. I believe that this is also a large contributor to the spike in safe haven assets that we are witnessing, even as equities in the US stock market continues to bleed in the red. And I'm not trying to be a fearmonger here, but we do need to get prepared. It doesn't help anybody to ignore the reality of the situation that is developing, and it does seem to be getting more dire by the day. So keep stacking, keep prepping. Don't forget to like, comment, and subscribe. If you enjoyed this video, then check out the one that is popping up on your screen right now, and I will catch you next time. Stay safe and happy stacking, everyone. Smart Silver Stacker, out.